Good evening, everyone. Tracy Luciani Price from Price Team Mortgages with mortgage myth number 4. So mortgage myth number 4 would be that my bank is the best place to get my mortgage. Many people think this, the place where they have their checking account, that bank is going to always give them the best terms and conditions. And nothing could be farther from the truth. The reason that you should always consider alternatives is because there are many. There are 70, 80 different banking institutions, including credit unions, as well as non-bank lenders that you can't access on your main street, and lots of people lots of companies who want your mortgage and are prepared to give you the best rate and conditions. And often the major banks, the big 5, don't often have the best terms and conditions. And actually, they did a survey a couple of years ago, CMHC, Canada Mortgage and Housing Corporation, which found that actually if you used a mortgage broker, you would get on average a half a point off your interest rate. Now, interest rate isn't everything, but it is a lot to do with how much money that you will pay over the term of your mortgage. So another reason is that the bank is not the best place to get your mortgage is for the reason that the bank is only interested in trying to extract as much money as they can from you. We always say, look around the city and find out the buildings with the highest buildings and the ones paved with gold. And those happen to be Canada's banks. And they didn't get rich by their own money, they got rich on the backs of Canadians. So it's your money that built those big ivory towers. So when you think about that, you got to remember that the banks are trying to get as much money out of you as they can. They don't just do it through mortgages, they also do it through lines of credit, credit cards, of course, at 18 and 19%. They, on average, are trying to sell you 4 different types of credit, so you get yourself in debt. So the reason, again, that you would not want to do that is because we want to have people create wealth. We want people to get ahead in the society. We don't want you feeling like every bit of your hard-earned money is going to pay interest. And interest is the silent eater of your paycheck. So the bank wants to get your paycheck, and if you bank there, they're going to want to get more of it, and they're going to want to sell you as many products. And if you're a successful client to them, you're buying their mortgage, you're buying their line of credit, usually at a point above prime, you're buying a credit card that you keep $5,000 to $10,000 at 18%, and of course you have a car payment as well, and that could be at 8%. And before you know it, if you actually calculated the interest, it would actually make you sick. So a mortgage broker, on the other hand, is trying to keep as much money in your pocket. We're trying to find ways for you to get ahead. And so that's what our role is. And that's why people keep coming back to us time and time again, because they are. One of the biggest things that we have seen in the past is people say, well, I got a really good rate from my bank. And when you talk longer to people, you find out that rate was not really the best rate, number one. Number two, it had fine print that the client wasn't really aware of. That fine print would be something like the IRD, the interest rate differential. And that is if you break your mortgage, that you will pay a penalty. The banks never ever talk about it. And the major banks, your bank that you have your checking account, will use this so-called discounted rate that they give you and actually claw back every bit of that low interest that they gave you. It's called an interest rate differential, and it's never disclosed. I had a client in the other day, a very nice couple, and they said they would never, ever, ever deal with their bank again. And I said, well, why? Well, they said right before we went to purchase our house, 2 days before closing, they found out that they had a $20,000 penalty. They were in shock. They thought they were going to have $20,000 more in their pockets that they could apply to their next house. Instead, this is what we find. The bank did a sneaky number on them. And they said, oh yeah, sorry, Mr. Customer, you do have to pay $20,000 in a penalty to get out of your mortgage. Well, it's okay. We'll give you a line of credit for $20,000 that you can take to your new home. Yay, yay. Oh wow, thank you so much for giving me $20,000 that I have to pay back. So it's those kind of things that the banks are sneaky about. And we're here to protect you. We're here to tell you what is the fine print that you should be aware of and what you should be leery of. And that's why realize, please, that there are other options besides your major banks. One other thing that I'd like to make mention of, just a minute, I just have to have a drink. I'm actually a cool grandmother, just a new grandmother. Remember your mother and father used to say, don't put all your eggs in one basket. How true is that? It really is a true statement, and it really applies to mortgages. Because if your bank has full control over every part of your financial business, they also have control to destroy you if they need to. And I've seen this case many, many times as well. If you have your mortgage, your line of credit, your credit card, everything with that same bank, if you run into trouble, they can make it really, really nasty for you because they have control of your bank account. I've had people tell me that the bank went into their kids' tax accounts, their TFSAs, to retrieve money because they hadn't made a credit card payment. And this is absolutely true, that if your children's savings accounts are there and you bank there and your mortgage is there and your line of credit, they have way, way, way too much control, in my opinion. So if you decide to take your mortgage somewhere else to a reputable, many of our reputable monoline lenders, they only deal in mortgages, and actually they're backed by the major banks. It's sort of like wholesale mortgages. Those lenders are really super good in terms of not only giving you great rates, they give you discounted rates on your penalties, and in the end, they don't have full control over you as the client because they can't reach into any of your accounts and withdraw money. You can keep your same banking even if you do switch lenders, and you can go onto our website at any point, and we're very transparent. You can see all the rates, but more than the rates, always remember that there's always the other side. Don't get fooled by just a great rate, because in the end, it may be at your folly. So happy Monday, everyone. It's the beginning of March. It came in like a lamb. I'll be here every week till I run out of myths. I don't know how many I'm going to have, but right now I've had 4. And today's myth is that your bank is where you will get the best deal for your mortgage. So have a good evening, and we'll talk to you next week. Bye for now.